Sometimes the strongest signals in a chart come from what price fails to do. Last time when we looked at ICP, we talked about the one thing it needed to break to even start a bullish shift. And this week, instead of breaking that level, the chart did the exact opposite, confirming that sellers are still fully in control. This is Shah, and let's break down exactly what is happening with ICP step by step. The current price of ICP is around $4 and the overall structure remains bearish. In the previous update, we discussed that the market was still trading under the 4-hour trend line and that the major confirmation for a bullish reversal would come only if price managed to break above $5. That level represented the previous lower high. Breaking it would have shown strength and it would have signaled that the internal structure was shifting in favor of buyers. But that breakout never happened. Instead, ICP failed at the $5 level once again. This rejection was extremely important because it showed that buyers were not strong enough to take control. Whenever a market keeps failing at the same lower high, it confirms that the downtrend is still intact. From there, price moved back toward the support level at $4.5. This was the line we marked last time as a crucial support. If ICP had held $4.5, there could have been at least a temporary bounce or a consolidation phase, but the market did not hold that level. Instead, it broke below it, and that confirmed continuation to the downside. Now the chart is moving toward the next support at $3.7. This is the next area where we can expect the market to slow down or react. It is not a strong long-term support, but it is still an important short-term level where price can stabilize before deciding its next move. Above price, the nearest resistance now sits at $4.5, the same level it recently lost. This is meaningful because once a support breaks, it often turns into resistance. So if ICP ever tries to bounce from the current area, the first major challenge will be reclaiming $4.5. Without that reclaim, any bounce remains weak and temporary. The direction is still clearly bearish as long as the market remains below the 4-hour trend line. And below the $4.5 resistance, there is no sign of a reversal. The downtrend is clean, the lower highs and lower lows are consistent, and sellers remain in control. For any meaningful recovery to begin, two things must happen. First, ICP needs to reclaim the $4.5 level with strength. Second, it needs to break out of the downtrend line that has been guiding the entire move. Only after these two confirmations can we talk about a structural shift that might target higher levels like $5 or even beyond. Until then, this is still a bearish chart and the market is doing exactly what a downtrend does, rejecting resistance, breaking supports, and stepping down slowly toward lower levels. If you want more clear and simple analysis like this, make sure you subscribe for more coin breakdowns and let me know in the comments which coin you want me to cover next.